It's official, folks. Economists from the Florida Atlantic University, who do a lot of steady research in real estate, said once again that Florida is grossly overpriced by nearly 50% in some markets. Folks, listen, they reviewed 100 metros. You might have seen the headline. Yahoo Finance brought this market piece to everybody and said, you know what? These are the 10 most overpriced metros. Now, folks, when this data came out, I wasn't all too surprised because I already realized that Florida's got some challenges. Number one challenge is that a lot of Florida was appreciated and built up in price, not by the support of local wages and people that live here, but by those moving here from out of the state with stronger wages. Well, folks, I just saw an article in the past week from Business Insider that said right now there's a huge move across all companies, and particularly the tech sector, to squash remote working for good. That all of this layoff activity that you've seen at the end of last year going into the start of this year, which, by the way, folks, was a huge move of layoffs. 2023 was a record number of different sectors laying people off. And as we start 2024, Business Insider points out the fact that a lot of these layoffs are due to people saying, you know what, I'm going to go without a job. Or conversely, they might have avoided a layoff. But in any case, if they go back to be rehired, the likelihood of them remaining in the Sunshine State and doing their work on the beach while they're in front of their computer is unlikely, because this particular role in economy is being reversed. But folks, back to the original story. Economists point to 5 marketplaces out of 100 metros are in Florida. 3 of the 5 are in Central Florida, folks. I was taken back by that, and most of the time, I really was only focusing on inventory in and inventory being closed. And I did see alarms. Florida has much, much higher inventory relative to pre-pandemic times compared to the US. I knew this, but folks, I dove in further. Check out what I'm about to show you. Data by data, Florida versus the US. You aren't going to believe what you're about to see. Check this out.
Record high mortgage levels are starting to take their toll. The mortgage rate is at 14.75%.
Folks, look at this. First stop, year over year inventory growth. These are the states like you see down here in Florida, like you see in Louisiana, Mississippi, Nebraska. These states that are bright red have way more inventory coming into 2024 versus the year prior. Now, interestingly enough, look at the blue states. They're actually blue states. You have California, Nevada. You have all these Northeast states like New York, New Jersey, Pennsylvania, Chicago, Michigan. Fascinatingly enough, folks, those are actually stalling out on inventory right now. And you have these states in the South actually going the other direction, which is completely different than what we saw in 2023. Take a look at this, folks. These are the lowest inventory versus last year. This is the bottom of the list. Nevada, Connecticut, New Jersey, Idaho, Illinois, California. Now, one thing I will point out is that in 2023, these states were dumping a lot of inventory. Nevada was way up to its neck in inventory at the beginning of last year. So maybe the fact is they're just chasing some really high numbers, and that might be a problem, or that might be part of it. But I'm also seeing some updates coming out of those states where people are saying that there's a return to multiple offers. But look at where the inventory is piling on as we start 2024. Florida, number 1, 27% climb in inventory year over year. Louisiana facing the same thing. And I really can't find a whole lot because there's not a lot of market leaders on YouTube talking about Louisiana. So I'm not sure what is going on there. But 27%. Mississippi, 24.3%. Nebraska and Arkansas, some of those Midwestern states. And again, Alabama, which, folks, as you'll remember, last year, a lot of the South was leading the way. There was still market tension in the South. People were wondering, when will the levee break? When will there be a cycling and a shift in those particular markets? Folks, it looks to be underway as we speak. Now, folks, the next chart I want to show you is called sales inventory deficit. Now, what these results are showing you, where you see Texas, Florida, these are kind of red, kind of warm looking. These have more than they need. All these states that are in blue are in a huge deficit in how much inventory they need to support their normal sales performance versus the average in history. So again, look at the bottom. You have these northeastern states like Connecticut, Vermont. It's fascinating, folks. These particular states are super anemic on available inventory. Their numbers are ridiculous. And the reality is, notice these probably don't have a humongous number of shadow inventory type homes, second homeowner type, short-term rental marketplace, all these weird pocket categories that tend to possibly blow out markets during inflationary seasons. They're tight. They need more inventory. So you have Illinois, Rhode Island, Maine, New Hampshire, the same club, but let's look at the opposite end. These at the top of the list are actually over on inventory. They have more than they actually need versus history. They're not in deficit. They're in positives. And you got Texas at the top of the list on its percentage. You've got Utah, Tennessee, District of Columbia, and Florida. Folks, that doesn't mean that they're leading in how much inventory is out there. It just says that based on what they historically have available for buyers to look at and consider to buy, they've got more. They're over the number right now. And you can see that Florida is not over as much as Texas is, but yet we obviously know all of these markets are in a league together. I will tell you folks, look at Utah, look at Tennessee, look at Florida. What do those have in common? They're short-term rental, they're second home. These particular markets, now folks, may not be thinking of that in Tennessee, but there's a lot of second home Airbnb stuff in Nashville and particularly in the Pigeon Forge, Gatlinburg area. Utah's got it as well. There's a big winter market for that type of inventory of people looking to stay there while they're skiing and things of that nature. All right, folks, the next data point I want to show you that you're looking at on screen is the number of new listings recently added to the market. This is an indication of which of your states have a lot of increasing supply right now compared to the rest. Now, look at what I'm about to show you. You obviously can see, look at the South. There is a push of new listing inventory. You can see that there's a little bit of a jump up here in the North. Texas, obviously, as well. California might be shifting a little bit more as we go into 2024. But allow me to show you in the table view. Look at where there's a limited number of inventory coming to the market. You got Alaska, Vermont, Wyoming, North Dakota, South Dakota, Midwestern states, District of Columbia, which is good because you'll remember. You have DC, which is good because you'll remember a few charts back, they were actually well above year over year in terms of their inventory holdings. Rhode Island, Montana. But folks, look at the front side of the chart. Look at Florida. 33,800 listings. 33,000 listings added to the market last month in Florida. That is enormous. And we're talking like Christmas month. Look at this by comparison. Look at this, folks. Look at the population over here, folks. 22 million in population in Florida, nearly twice as much down here in California, yet we're listing double the amount of inventory in a single month versus the entire state of California. That is crazy. You're seeing a lot of inventory spiking and a lot of push in Florida, which again, it's not crazy over the top high yet. It's not so bad in all markets that there's a massive consensus of price slide. However, it is a disparity that certain markets in Florida is starting to see an overwhelming supply, particularly the luxury range, particularly some move up markets throughout the state and the short-term rental market. Probably the first-time home buyer market, certain pockets around the entry price points in Florida, probably still doing okay, but you are in all likelihood starting to see a slide from the top down. And that will only last, in my opinion, so long. The bottom end is only going to climb so long as it starts to reach the second tier and the third tier luxury is coming down to beat it. And again, it's not a collapse all over. There is some price shifting that is significant, but again, it's case by case. And you might be in the comments saying, I don't see what you're talking about. I get it, but it is happening in Florida. It is shifting in a lot of different parts. At NestShare, we list your home for just 3%, saving you $25,000 on the sale of your property. You can trust NestShare to sell your home right and pass the savings on to you. Visit NestShare.com before you list your next home, and don't let anybody you know sell before talking to us. All right, folks, what you're looking at on the screen is the states that are price reducing the most in real time, folks. So what you're seeing right here, the states that are in blue, very little price cutting. People are not anxious to sell. They don't have a ton of issues getting their house off the market. The states that are in red have the highest percentage of prices coming down. Folks, look at the states that are reducing the least, fewest incidents of sellers moving their price down in order to sell. New York is top of that pile. New Jersey, Vermont, Connecticut, right? We're seeing those same markets again with very little year-over-year supply climb. Very little active inventory. They're not having to reduce. They don't need to. Rhode Island, North Dakota, South Dakota, Montana, Alaska, and so on. Let's look at the top of the list. Arizona, number one. The most reductions of all the states is coming from there, which is interesting because they're not necessarily way over last year, year-over-year inventory out in Arizona. But maybe there's still just a lingering amount of inventory and certain sellers have to go. Indiana is number two. Look at number three. Florida is third out of 50 states Okay. The darling of the Sunshine State, which everybody wants my house. Everything's multiple offers. Third in the entire country for price reductions. Followed close behind us is South Carolina, then Tennessee. You'll see Ohio, Texas, Alabama, Nevada, and Iowa, ranking number 10. Notice what happens when you go south. All right, folks, one of the most important graphics you want to see is price growth year over year. Now, on this chart, folks, the states that you see in blue are the lowest in the union in terms of price growth year over year. Now, as you go up to the Northeast, you notice how it starts to turn red. You get all the way up here to Maine, you see an 8% price year over year. So the entire Northeast, folks, red hot versus last year. You start to come down past Virginia, boom, look what happens. We see the shade of color change as we get down here to the southern states because most of the prices here grew by less than 3%. Notable as well, folks, the Northwest literally was flat, break even on the year with Washington, Oregon practically at zero. Folks, let me show you this price appreciation another way. Look at this. These are the top 10 price earners in the U.S. against last year. I was wrong. I think I said Maine was number one at 8.3%. But folks, Connecticut at 10%. New Jersey and Maine directly behind them, breaking just over 8% in year-over-year home price growth. A party still continues, folks. In the Northeast, look at this. You got New Hampshire, Rhode Island, Massachusetts. Folks in Massachusetts have been saying it is crazy here still. Obviously, you still have insane price appreciation against last year. Now, many of you say, Jared, we're here to talk about Florida. Where are they at? Florida is 34th on the list, folks. It's only 3 or 4 states above the zero line. Okay, so it's in the bottom 1/3, right at it, in terms of its price growth to last year. Folks, help me out with something in the comments. If we're starting the year off, top of the market with the most inventory hitting the market, highest new listing count of all 50 states, even doubling what California did, can you guys help me in the comments? If we barely got above zero in 2023, tell me what you think is going to happen in 2024. What is the future of the marketplace here in Florida? All right, folks, the next data point is overvalued. This is a fascinating look at how affordable is your state versus income levels, okay? So this is the ability of locals to own and afford real estate within the state itself. And I've been telling you that this has been entirely skewed in Florida and that maybe there's a proverbial chickens coming home to roost for our state as people that have been moving here, inflating the price, are now regressing, possibly being driven back to where they came from. And folks, ultimately, without a new wave year after year of people moving here from more expensive states with higher income levels than what the locals have, how can prices be propped up when it is record unaffordable for those that live here? And the answer is it's not tenable. That is the concern for the year that we find ourselves, because we're seeing the data showing that people that are actually moving to the state are dropping. The migration data, which has been blessing Florida with people moving from Chicago and New York City and Jersey and all these other places, many of them coming here with their income from those other states, building up our property values. That big buying segment is starting to fade. And I'll tell you, because I've reviewed it, I went through migration data recently, and this is what's a concern for this chart right here, because what it says is Florida is 30% overvalued when considering the cost currently to own a home in Florida versus people's incomes. Now, folks, 30% is wrong. It's probably more like 40%, because this chart is taking in consideration the cost to own a home in Florida by basing it on national insurance rate estimates. But we know, folks, that insurance in Florida is double, possibly triple that of where these other states are. So when you're seeing this say that it's 30% overvalued for the people to be able to afford it that live in the local market, it's actually much higher. So the gap is bigger because our carrying cost that factor that result on the screen is not accurate, because it's using estimates that are more favorable than they really are. Now, folks, at the bottom of the list, you're actually going to see District of Columbia, which supposedly ranks undervalued. Louisiana, the same thing. North Dakota, Alaska, Mississippi. These are your affordable places. And it actually shifts pretty fast, right? It goes from like 1.2% to, by the time you're at 41, you're at 9% overvalued with Pennsylvania. So there's quite a range in what is supposedly the most affordable side of the graph. But folks, let's go to the top markets that, according to local income, is untenably expensive for the locals. Number 1 is Idaho. Obviously, Boise was a breakout over the pandemic. Its prices shot off the charts, and that marketplace is likely due some correction. But look further, you have Montana, and ranked number 3 is Florida. And folks, I would argue that Florida is not number 3. Florida is beyond Idaho, and it's probably beyond Idaho by 3, 4, 5%, even higher. Florida is effectively the top of the list when you factor in, like I said, the real cost of insurance, which is not factored. It's simply showing income on cheaper insurance rates, which would actually put us further up the list. But let's read on. Number 4, Georgia, Tennessee's at 29%, New Hampshire, Utah, Maine, Indiana, and Texas at number 10. Folks, I will say this. Florida obviously is softening. We're hovering right around 4.5 months of supply, meaning if we stop listing all homes in Florida, it would take us about 4.5 months just to sell off the homes we have. Not to mention, we may see another 30 or 40,000 homes hit the market this month and 30 to 40,000 more next month. And we're possibly, if we don't see buyer interest ticking higher, you're going to see a lot of this inventory unsold. You're going to see the static levels of inventory well beyond possibly what they were coming to the pandemic. And that's the concern, folks. The concern is what happens to the inventory when people can't buy it? What happens then? What happens to pricing as inventory starts to inch up? It's already going in that direction. We are already holding one of the highest static inventories compared to pre-pandemic than all the other states combined. It's much dramatically different in Florida, and that's what you need to know. But you also need to know this. Even if you own in Florida, your area may be completely in a different position than what this data suggests. You might be sitting there on your couch in Miami saying, this is crazy. This is the hottest market I've ever seen. You might be sitting in a $300,000 entry-priced home in the heart of Orlando, one of the most popular areas that people can barely afford, and your house might get multiple offers because you're in the first-time homebuyer sector of the market, and that's where the market is. But folks, if you're in the move-up or the luxury market in many of these marketplaces, if you're in the wrong community altogether, if you're in the short-term or second home rental market, you're seeing the picture exactly as I've outlined it. You're seeing 2 years of inventory. You're saying, I may never get this home sold for 1.5 years or more. Many of you that are listing homes for people in the move-up category market, which is the mid and the upper range, as well as luxury, you're seeing many of your sellers shooting a pie-in-the-sky price onto the house only to watch it get rejected for months on end. We're seeing it in the most popular markets in Florida. So I will say that while you may be seeing a completely different picture, things take time to change. The most affordable segment of the marketplace is and remains hot in most areas of Florida. And I will say the most appealing homes in the mid sector that are priced well, they're gone as well. They may not have any problem selling, but folks that are looking to liquidate homes in any of these market segments that actually need work, they're moving them as is, they're not getting the luxury of seeing a multiple offer market. Same thing with people who are stuck in 2021 pricing mode, thinking that these people are going to get 3% interest rates and they're going to offer me whatever I ask. Those days are over. And if you don't price your home well in Florida, you will be sitting on it for quite a while. And I will say this, if you're selling in Central Florida, your equity matters more than ever. As you saw in the data, the marketplace of Florida only grew by 1.8, 1.9%. It barely moved. And when you're considering selling a home, facing the old traditional cost of commission at 5 and 6%, 1.9 didn't really move the needle for the entire year. And this year, you might actually be at flat, even zero, or you might even lose some of that 1.9 that was gained last year. Saying all that to say this, if you're selling a home in Central Florida, check out NestShare.com. They list your house for 3% total. Full broker support, full high definition photos, video, end-to-end walking through the transaction with you, all for just 3% in writing total upfront when you list with NestShare.com, powered by EXP. Check them out if you're thinking of selling. And I'm not saying don't buy. So all of you that will then eventually email me, contact me, feel free. But the reality is, if you're looking to buy, feel free to consider buying, but make sure you're financially stable to own that home for many years to come, and make sure you make adequate comparison from a shelter perspective. Owning a home is shelter cost. Don't think of it as it's investment, it's investment. That's all this is. And yes, it is an investment of sorts, but what good is considering an investment when it costs you way more to own than rent, and you possibly may not see appreciation on your house for a few years. And you possibly may not see any appreciation in a meaningful way for quite a few years, maybe 2, 3, 4, 5 years. So why get nailed at a much higher cost to own if there's renting capacity for a season? You need to make those decisions based on what's right for you, based on your financial position, based on how long you plan to own it, and mitigating those costs versus what opportunities you have that you might be able to rent in the same marketplace. Because you're going to see a contrast one way or another. And many of you rightly point out in the comments, you say, you know what? If the mortgage on a house you buy, if it can't rent for that much, you shouldn't be buying it. Further, you go on to say that the house price should be at a price whereby it can be rented for that price for the going market rate, which is a fascinating statement. What you're saying is we could see prices actually drift down to the point where what you buy a house for at today's market rate of interest for the 30-year fixed, that just might be the future of home prices matching up with rents. And keeping in mind as well that we possibly are seeing a further softening in rents. Rents coming down, possibly home prices parodying that. Because why? Why would people spend thousands of dollars more a year? And I'm talking 5, 10,000 plus in the mid-range in mortgage costs, 10, 12,000 over what it costs to rent the same home. What sense does that make? But that's it, folks. Tell me what you're seeing where you live in the comments below. Let's keep the conversation going on there. We'll talk to you on the next one.